cut out. It is Tuesday, September 10th. I think on the live one yesterday, I was told that it was cutting out. If I cut out and you listen to it and you hear me cutting out, just comment. I try and listen to, sample about 20 minutes of the podcast every day just so that I don't put crap out there, but I don't listen to the whole thing. So if you ever hear some technical issues, just comment either on Spotify or anywhere you want. So I'll have brand new Apple stuff after I spend about $3,000 on all the new stuff that they talked about. We'll talk about a special on Seeking Alpha Premium where you get Alpha Picks too. We'll talk about four lessons about income versus hype, bad companies, blah, 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 all of that stuff. We will talk about the elevator pitch. So today I'm going to talk about the elevator pitch of your portfolio and why you should have it. We'll talk about real estate sector and XLU. We'll talk about Oppenheimer best bets, Apple event. We'll talk about App Lovin'. We'll talk about 10 stocks that Steve Kress recommends, and the YOLO of the day, SMMT, and then earnings, Oracle and GME, and then the social request. But I'm going to start this off with an offer. And if you don't like this, F you. If you don't like it, F you. So here on the second link, okay, Seeking Alpha Premium plus 2 free Alpha Picks, okay? Lock in your price. This is a key point. When you click on this, you're going to get over to here. Join Seeking Alpha Premium and get 2 free Alpha Picks, just $214 for the first year. You do get 2 free Alpha Picks. Okay, you get an example of what you would get if you join Alpha Picks. Remember, there's 2 separate Seeking Alpha subscriptions that I'm an affiliate for. There is Seeking Alpha Premium, and as you watch this podcast and you hear me talk about the quant rating, it's 5 categories that they rate, and they rate every stock. That I think it's thousands of stocks. I'm not sure exactly how many, but they rate thousands of stocks based on this quant. Okay, that's what you get with Seeking Alpha Premium. If you wanted just Alpha Picks, then it's Alpha Picks. It's the third link on Linktree. Okay, that's the third pick. And that would take you over here. This is $449 per year. I save you $50. But the performance of the portfolio is tremendous. It is 2 free picks per month. Not free, but 2 picks per month. One's on the 1st and one on the 15th, and they tell you when to sell. It's like a managed portfolio in that you make your own decisions, but they give you some guidance, and the portfolio performance is just unmatched. It is unbelievable. But with today's offer, and this goes on just for, I think, 10 days now, so hop on it. You get a free 7-day trial with this. But when you join Seeking Alpha Premium, you get 2 free Alpha Picks. The biggest thing, though, is you lock in that $214 price, okay? The reason is October 1st, they're taking the renewal rate from $239 up to $299, okay? They're taking the rate up. The price increases to $299 on October 1st. So get $25 off, get the 2 free Alpha Picks. It's fantastic. Again, this is one of the tools that I use constantly. This is a new offer. Price increases to $299 on October 1st. So get it while you can. Click on the link. Again, the link tree is going to save you money. It's going to get you those 2 free Alpha Picks. This is an exclusive offer for my podcast. It's called the seasonal offer. I don't exactly know what it is. But again, that's a big one. Okay, big one. Now let's go over the Qs because this is typically what I look at in the newsletter. The newsletter is 100% free. So if you go over to Linktree, this is the 5th link down here. The newsletter during the week is 100% free. Okay, during the weekend, I do charge. There's going to be some member benefits as well, like a monthly meeting, chats, chart guidance, blah, blah, blah. There's education section, but it is free. And I usually start out with the Qs because my portfolio matches the Qs. Just personal. We'll talk about elevator pitch. My personal portfolio and my guide are the Qs. I'm a bit large cap tech investor. So where are the Qs? We use the 250 as support. 450. We're right at 456. Okay, in pre-market, we're up 0.41. Yesterday was a good day. You can see we broke through that in August with that yen trade and all of that crash. Algorithm got you back in. Then it got you out with a 4% gain. We're still out. You're not back in with the algorithm yet, okay? The 4-hour algorithm, I do listen to it. It does make you 51%. If you buy and hold over 24 months, you make 53%. And the reason is because of yesterday's bounce up. The algorithm plays in this middle ground of, hey, when should I buy? When should I sell? So right now, it still has you out. I'm not giving the all clear for my money and throwing it in here. I'm just a little bit more cautious. At 54 years old, I may have different risk tolerances. I may be higher than you. I may be lower than you. If you are 20-something years old, your risk tolerance should be higher than mine. And that's just portfolio management. That's just life management. Your risk should be higher than mine. Right now, would I get in? Probably not. The 9-day just doesn't have a forward-moving, positive one. But I don't see the 50-day coming down here. Again, we're heading into rate cuts next week. There's a debate, 25 points, 50 points. You got the presidential debate tonight. You got inflation coming out tomorrow and Thursday. You've got jobs numbers coming out. Again, there's a lot of data coming in this market. It's not earnings. It's financial data. It's the state of the presidential election. It is all of that. There's a lot of noise in the market. But one of the things I want to point out is that Friday, okay, September 6th at 9:30, we opened up at 460. 460. We're back at 456. So that entire round trip on Friday, where we broke this 450, we've gotten it back. There was just a ton of noise in the market. It's just a ton of noise. And one of the things that I was listening to CNBC yesterday, and one of the analysts was talking about Richard Bernstein. A few years ago, he had posted utilities outperforming the NASDAQ over a certain amount of time. So in a book I wrote 20 years ago, I was asked, building wealth isn't difficult, so why don't people do it? The book pointed out some simple wealth building concepts everyone should use, but a litany of supposedly newer, better, more exciting investments lure investors away from time-tested strategies. Income versus hype. And so he did this chart, okay? NASDAQ, the Qs versus utilities. It's February 1971 through July 2023. Utilities with the dividends reinvested beat the NASDAQ. Is that true today? I don't know. I mean, here's XLU versus XLK, a 10-year chart. This doesn't reinvest dividends, but it is total return. So you get those dividends in XLU. You get those dividends in XLK. This is a 10-year chart. So is that one true? I don't know if it's still true today. But the point is, again, income versus hype. Now, lesson 2 that he posted about, bad companies make good stocks over long term. And this may be completely contradictory to what I'd say, what other people say. Chart 2 shows the performance. Penny, I love you. Performance since 1986 of stocks grouped by S&P common stock ranking. Okay? You can do that and look this up yourself. It's interesting. Lesson 3. Realize worthwhile risk-taking often means investing in unattractive assets. Maybe that's something that you want to do. Refinitiv Venture Capital versus MSCI Emerging Markets. MSCI Emerging Markets, I'd never invest in. That's just me. Again, that's risk-taking. For me, unnecessary. Lesson 4, understand the definition of long-term. Most investors typically say they're long-term investors until their portfolio starts to underperform. Then they quickly turn into traders who chase the hottest investment. That is 101 as to how to underperform the markets. Okay? Now, he's using the NASDAQ composite as an example. But again, long-term for me is what I am. And that's it. And so I wanted to see, hey, does the XLU actually beat it? I don't know. I mean, again, I'm trying to provide information here. One that was interesting to me was the real estate and XLRE. So I went in and I did a chart. Again, this is all part of Seeking Alpha. We're not using Trendspider yet. We're using Seeking Alpha. But XLRE year to date versus VOO versus the 20-year TLT versus XLU. XLRE is only up 12%. XLU is up 23% year to date. Now, what's interesting is you can see the XLRE and TLT right around this April timeframe. They just took a turn down. It's not like these two just shot up. These two just took a turn down, and then they're recovering. So does XLRE have a chance of catching up to XLU? I think it's interesting. I think it's interesting. But again, the market for me is all noise. This feels very much like August. It tells me wait for the algo to buy, and the algorithm is in Trendspider. It tells me just to wait. And did I buy in August? No, I felt uncomfortable. I won't make that same mistake. And the reason I won't make the same mistake this time is because we're getting out of the seasonality. The reason I didn't want to buy in August was because August was a good month. Okay, it's one of the top months. 58% of the time over the last 26 years, you were positive. Your mean change is 1%. Then you get to September over the last 26 years. Your mean change is minus 244%. And you only win 42% of the time. It didn't make sense for me to buy there. In September, it makes sense for me to buy there. Okay, so I'm going to start taking that 5%. And as I find stocks, as I find opportunities, I will start adding them back. Once the indexes tell me, yes, we may be done. It might not be the bottom. That's the choice that you make. It might not be the bottom. But in my mind, the algorithm provides me the safety to sleep at night when I make those decisions. If you want the algorithm and you want some strategies that are back tested, again, it's back tested for the last 2 years. If you had followed the algorithm, you're up 51%. If you had bought and held, you're up 53%. So buying and holding something like QQQ for me is a strategy. I just want to know when to do it. And so the algorithm tells me to do it. Well, if you want the algorithm and it's something that you want, you can build your own strategy. All I do is give you a leg up, but you can go and build your own strategy in Trendspider. Trendspider is the top link right here. And you get to that page, $53 a month for the standard. If you want the enhanced, you can get it. I think the enhanced is the best platform that you can get. But if you want the standard, you can get it for $642 a year. It's $53 a month. I think it's phenomenal. Again, I'm waiting for that. Now let's talk about everything that I get a lot of questions. Okay, I get a lot of social requests, and I get, hey, should I buy this? Should I buy this? Should I buy this? I don't always bring them to the podcast. And the reason I don't always bring them to the podcast is because when somebody just tells me, hey, should I buy Palantir? Hey, should I buy, Apple? Should I buy Google? Should I buy this? Should I buy that? The answer is no. And the reason the answer is no is because A, I'm a douche on the internet, and you don't listen to a douche on the internet. So what do? You need to develop what I call an elevator pitch. And if you don't know what an elevator pitch, for any salesperson, it's when you get on the first floor with a CEO or the person that you're trying to sell. You have to sell them within 30 seconds, 30 seconds to a minute, okay? That's because they're going up to their floor. And typically in elevators, you're in there for 30 seconds to a minute. Develop your elevator pitch for every stock in your portfolio, okay? You're going on CNBC. You are the analyst, and they're talking about Apple. What are you going to say? Why do you have it in your portfolio? Every stock in your portfolio, even an ETF, you should have that elevator pitch. Grab your wife, grab your husband, grab your kids, grab anybody, and do the elevator pitch. And if you can't convince them that that's a good stock for you to hold, then you don't have a good argument, and you don't go and ask a douche on the internet, what should I do? Because all you're looking for when you ask a douche on the internet is some type of validation. And the only thing that matters is the price. So nobody can tell you absolutely it's going up. Nobody can tell you absolutely it's going down. You shouldn't buy it right now. Yes, the market is a good market. No, nobody can tell you that. You have to do it yourself. And it doesn't mean that you have to know everything about the stock. We were just on air and somebody asked me about Broadcom, and I said, there's another chip company that's a custom chip builder, and I couldn't think of the damn symbol. And so I'm not going to bring it up on the podcast because I don't want to look like a douche, even though half the time I do look like a douche. But my point is, you have to have that elevator pitch for every stock in your portfolio. And remember, Warren Buffett may have 50, 60 names in his portfolio. He's also got hundreds, if not thousands, of advisors working for him. Okay? You have just you. If you have to figure out, can I keep 20 stocks in my account? And can I do the elevator pitch on a whim for those 20 stocks? If the answer is no, whittle it down. Whittle it down. I mean, you're managing this portfolio. So you've got to know when's a good time to buy, when's a good time to sell, and how to do it. You know, I remember this when I first started getting on Trendspider. And I started learning how to use it. And Jason from Trendspider, who is Jason Krutsky on Twitter, I actually listened to him. You know, a lot of times I would join and I would ask questions. I wanted to be like a sponge and learn technical trading and see exactly what Trendspider could do. And so I would get on there. And I remember specifically many, many times people would ask Jason about SMCI, about NVIDIA, about other stocks that were, hot stocks, or, back in the day, Apple, Tesla. They would ask about those particular stocks and, is it overvalued? And Jason's response was his elevator pitch. I don't care about fundamentals. I'm a technical trader. It's his elevator pitch. His elevator pitch for something like QQQ might be, well, my strategy, which back tests at 51% versus 53%, has me out. So I'm not buying. There's your elevator pitch. I'm out. I'm out at 4.4% gain. That's his elevator pitch. You need a strategy to be in place in order to help yourself get that elevator pitch. Is the MACD in a good place? Is the RSI in a good place? Are the stochastics good? The go, no go. I mean, that is a simple indicator on Trendspider as you can get. It's called go, no go. Go read up on how to do it. Google it and then sign up for Trendspider. You get that as part of your subscription. Okay? Elevator pitches are important, and I would urge you, before you ask me about a stock, go and ask a loved one that doesn't know about a stock, and you tell them, would you invest in this stock after your elevator pitch? And limit it to 30 seconds to a minute. That's it. Use it, and that's exactly what I do. When I look at this stuff and I look at it, you can tell me, this stock, they've got a drone delivery program and they're expected to get a government contract. I'm not going to be able to look at that in 30 seconds. So if you're asking me about a drone company and you can't find the symbol or it's a foreign stock and you know that I don't trade it, why are you asking me about it? That's like drive-through in McDonald's and saying, hey, what do you think about the Whopper? So the elevator pitch is important. It is something you should absolutely be able to do. Tomorrow, I'm going to talk about portfolio management and some of the mistakes that you guys are doing where you send me, hey, NVIDIA is now 80% of my portfolio and I just added it 2 weeks ago. Am I making a mistake? Yeah, we'll talk about that tomorrow. So Oppenheimer lists their best stocks here going into the 2024 elections. We have the debates tonight. This is a good list of stocks. I mean, there are some interesting ones. Industrial and overall economic policy. If a Republican sweep, Caterpillar, Tractor Supply, Regal Rexnord, I've never heard of it, XPO. Democratic sweep. You get companies like Capital, Crescent Capital, Golub Capital, Blue Owl Capital, which was a top quant pick, climate, environment, big tech, trade policy, corporate, insurance, M&A, healthcare. This is a huge list of, hey, if the Democrats win and the Republicans win, again, these are good stocks. I like this list. It was interesting. I'll include it in the newsletter. Citi, on the other hand, says, hey, if you're going to hold the Mag 7, you better have a barbell approach. And what a barbell is if you've ever gone to the weight room and you do bench press or anything like that, and you have to have the equal amount of weight on both sides, that's a barbell. It's as simple as that. And if you're going to hold the Mag 7 on this side and your portfolio is weighted that way, then exactly the point is that you've got to weight it down on the other side with something other than the Mag 7. Now, what do? I don't listen to this approach, but I thought this was interesting because they're mid caps. I know nothing about this space. DocuSign, I got out of. Zscaler, I like. Pinterest, I got out of. Pure Storage, I love that company. Unity Software, we had a cross up on it today. It's on the watch list. MongoDB, that might actually get, and they give you the expected returns. Okay, it's an interesting list. It's in the newsletter. Get it for free there. Apple event. Let's talk about the Apple event because your boy here, iPhone 13 Pro, I'm upgrading. And again, Saganucci, who has an outperform rating and a $240 price target on Apple, said the inclusion of sleep apnea detection for the Apple Watch and hearing aid functionality for Apple Pods Pro were the surprises, but artificial intelligence demos were somewhat underwhelming. I will tell you what I liked. Now, I am never getting out of the Apple ecosystem. It sucked me in, okay? I don't know how many of you do, but this is the base of my portfolio. This is my elevator pitch, okay? I am going to get the iPhone 16, the 16 Pro. Those camera enhancements, they sucked me in. The 15, it didn't suck me in. The 14, it didn't suck me in. I am perfectly fine with my 13. I'm now at a battery level on my 13 where I need an upgrade.
Please try again.
Which one? Oh, Siri, stop. Yeah, it's talking to me. Which one am I going to get? I am going to get the iPhone 16 Pro. Siri just threw me off my game. But I am going to get that. Okay, that's the first thing I'm going to get. The second thing I'm going to get is the new Watch 10. And the reason is my watch is at a battery level where if I use it for some of the guidance, I don't use GPS much, but when I rent a car and I'm out on Major League Soccer jobs, I do use Apple Maps and it dings on my watch when I need to make a turn. I like that. The problem is the battery just sucks it dry. And so by the time I get to the hotel or to my location, my battery on my watch is dead. And I don't like that. So I need a new battery. I need a new watch. I'll get the 10. I also like the fact that the 10 is the largest watch face they make. It is larger than the Ultra, but it's significantly lighter than the Ultra. I don't need the Ultra, but I like that. There's two things that I need on the watch. There are the alerts with the notifications, which I love because you don't look rude looking at your phone when you're in conversation or doing something. The second thing that I love is the oxygen level, the blood oxygen level, because when I go hiking and I go up to elevation, I like to have that handy. And it is good. It's good. It tells me when I need to get down from elevation. So I don't need the Apple Watch. These are two things that I want. I found it helpful. I am going to buy. Does this push the stock tremendously higher? I don't think so. All of the Apple intelligence stuff, it's all delayed. The algorithm knew this. It got you out with a 1% gain right here. The algorithm makes you 28%. If you bought and held over 2 years, you're up 41%. I look for entries with the algorithm. And I also know that 230 is a resistance level. It's a resistance level. Now, we'll talk about which one. I just want to take a look at Apple here in Seeking Alpha. The valuation is crazy. It's crazy. 33 times earnings, just too expensive. I went over it yesterday. It's just too expensive. The growth, not great. Now, if they have the growth with the iPhone upgrade cycle, it's going to be huge. It's going to be huge. So again, I think Apple for me is a hold. Say this iPhone event was nothing to you for Apple and Apple's just too expensive. Qualcomm, Broadcom, and others, okay? They're going to benefit from this upgrade cycle. You can set negative and neutral, Skyworks and Qorvo. But they're saying Cirrus, Qualcomm, and AVGO. I own AVGO. I don't own Qualcomm. I wish I owned a Qualcomm. And Qualcomm, in fact, has pulled back quite a bit, just like NVIDIA. But Qualcomm is at 159. We had that death cross, and we're still going down. Okay, on the weekly, you still haven't touched the 200-day. When you touch the 200-day, give me a call at 143. Qualcomm would be a buy there. Okay, we can look at Qualcomm in the quant. It's a hold, the valuation. Right now, and the only reason is the peg on the trailing 12 months. It's super high. But the forward, as they continue to grow, they're projecting growth. But their revenue growth year over year, not good. They will grow. They will grow. Apple hasn't figured out these chips yet. Simple as that. So Qualcomm, at some point, it is in the core portfolio. It's going to be a buy. You're going to have this 193 right there. You're going to have that as a resistance level. But when you take a look at Qualcomm and you look at Wall Street has a $217 price target on it. Now, we've talked about this many times before. They've chased this up. They have completely chased this up. So I would argue as well that NVIDIA is actually cheaper than Qualcomm. But to me, it's apples and oranges. NVIDIA, you're looking at the data center. And with Qualcomm, you're looking at handsets, you're looking at full self-driving, you're looking at other types of chips. So it's a little bit different. Taiwan Semi. August sales surge as AI demand continues. We talk about it all the time. This is an AI and a GLP-1 market. Talk about it all the time. Taiwan Semi. If Taiwan Semi surges, they manufacture for NVIDIA, Apple, and AMD. What do you want? Again, the quant says it's a strong buy. When you look at the quant, it's been a strong buy since 161. It's back at 161. Now, the only problem is the valuation. The valuation is expensive. The PEG ratio is next to nothing. Wall Street has a $210 price target on this. 30% up. We talked about it before. They chased it up. I would argue that this is probably fairly valued. You are taking significant political risk. But by owning NVIDIA, you have the same political risk. By owning Apple, you have the same political risk. By owning anything in the stock market. Because if China moves on Taiwan, it's not just going to be the chips that are down. It's going to be the entire freaking market. So you are taking risk there. But Taiwan Semi, their sales are up. And we just talked about NVIDIA and how cheap it is. Semis are the 21st century oil for the 20th. That's what he's saying. NVIDIA is trading at the same forward PE as Procter & Gamble and at half the cost of Costco. Watch this video. I'll link to it in the newsletter. Okay? That's it. Now this was a fantastic video. And this I think this goes to the psychology. If you play poker, you know risk. Okay, and Gunjan did a great job of inviting these two poker players who are also hedge fund managers and investment fund managers. And these guys play poker with her. This was amazing. And it's like, I think 10 minutes. It's 10 minutes of your time. And they go over, okay, when she goes all in, they just fold. And why? The risk wasn't there. This is just a masterclass in how to manage a portfolio, how to manage your risk. When you go all in, and we'll talk about it tomorrow. This is probably a great video for tomorrow, to be honest with you. Watch this, and then as tomorrow we talk about the the portfolio management and why you shouldn't go 80% into one stock all in once. Why you should be investing 1% and 2% and letting grow to 80% if you still believe in it, and how to do that. We'll talk about that tomorrow. But watch this video. This was amazing. Okay, Michael Saylor, who is the CEO and chairman of MicroStrategy, MSTR, just said that Bitcoin is going to effing $13 million. This is why you just buy MicroStrategy, okay? MSTR. I have a couple of buys in here. It's not, if it's going to $13 million, I'm perfectly happy because I'm invested in MicroStrategy. Did I get out on the algorithm when it told me to at 143? No. The algorithm makes you 696% versus buying and holding makes you 463%. As I'm bullish on Bitcoin, I just want to buy MicroStrategy. And I'm seeing it set up for a long-term breakout. Okay? I'm seeing it set up and it's just trading sideways. Now, it's on the downside of the 9-day. And I made this mistake with SMCI. But Bitcoin, in my mind, is a different strategy than SMCI. And I'm seeing this MACD on the weekly reset. I'm seeing the RSI come down to 50. You're getting this reset. This is the only one that I have other than IBIT. And I would say buy both of them. Buy both of them. Now, I'm going to include this. This is a stock that's in our watch portfolio. And if you want the watch portfolio, you get it when you sign up for Trendspider. The watch portfolio is in there. You just basically click on a link and you download it to your Trendspider setup. But Michael Wiggins is recommending AAPL. Okay, this is yesterday at 10:49 a.m. Now, why did I pick this one out? And the reason is because this is his analyst ratings, okay? He first recommended it November 7th, 2023. Since then, he's up 111% since he recommended it, okay? Second time he recommended it, January 20th, 2024. He's up 109%. Third time he recommended, April 8th, okay, of this year, he's up 10% on that. Fourth time he recommended it was August 2nd, 2024. August 2nd, he's up 25% in this name. So let's take a look at it. He likes it. You can read this article. If you have AppLovin, you can develop your strategy. It's a strong buy in the quant. The quant is these five factors, 5-factor grades. The only thing it's down on is valuation. But the PE, I would argue, is lower than Costco. And it's growing more than Costco. But again, it's Apple's, this is application software. There are a few software names that have come into love. And AppLovin is one of them. I like this name. I like the analysis that Michael did. I like his track record on this. When he recommends it, I take a look at that. So, fall into profits, top 10 stocks for a September dip. Again, this is Steve Kress. He's the head of the quant team. He's the guy who's in charge of Alpha Picks. He's fantastic. He says these 10 stocks are good for a September dip. If you want to, you can invest in them. I'll include that article in the newsletter. Now, Summit, SMMT, a top pick at Citi after unprecedented trial results. Bull rally continues. Okay, SMMT. This is outside my area of expertise. So I'm looking at Citi. I'm saying, okay, what can this do? Trial results were really good. It popped up. Yesterday, it was way up. Today, it's down 5.22%. We can look at Wall Street. There's 3 analysts that cover this. Their price target is 24. You can see they've chased it up. So let's take a look at the quant. The quant says hold. How long has it been a hold? It's been a hold all the way since $4.14, and you're at $18.05. Okay? It's been a hold since $4. The quant doesn't always get this right, but it was a sell back here. Or I'm sorry, it was not covered back here. Then it got covered. The momentum, A+. The valuation, they're not making money. Their growth, they're not making money. Profitability, gross profit margin 100%, because any money they take in, it's considered profit, but because they're not spending anything. It's a therapeutics company. How did I find this one? Well, I used FinViz, and it was last year when there was a big insider buy on a therapeutics company, and this one popped up. And it was, I think, last October 13th, 2023. It was the CEO bought $5 million worth. It was interesting. It was interesting. Now, that was the chief operating officer. Now we've got the CEO making a buy, $201,000. He bought $24,000. This guy bought it $1.68. He's at $14. I'd be retiring. If I turn $1.60, $5 million into $100 million, what's that? God, that's like $150 million that he's got now. That's huge. That's huge. That's how I found that one. Now, yesterday just seems to have popped. Let's go and look at it in the strategy in the 4-hour. I don't think that you trade this in the 4-hour, even though the 4-hour makes you money. Buying and holding, you're up 1,500% in 24 months. Something like this, I would take a look at the 65-minute and I would say, okay, we've got some catalysts, which are the test results. And yesterday, it got you in at $16. Am I buying at $18? No. If it gets back to 16 and the algorithm gives me a buy, yeah. You want to know why? Because over 8 months, trading this name on this 65-minute algorithm, you make 481%. Okay, you can use the Variance Explorer to see if there's a better time frame for you to trade this one. You can set up the strategy and then use the Variance Explorer. But I would argue that you want to trade this on a tight time frame. So that's the YOLO pick of the day. The YOLO pick of the day is Summit Therapeutics. We can talk about Oracle. Oracle yesterday, I said, I thought this one was going to be good. Did I put money into it? No. We talked about it because somebody had noticed yesterday, the cyber gangster had noticed that I had sold it in Earnings Hub. Oracle killed it. Oracle just killed it. They're up 12%. And they killed it. They announced an agreement with a partnership with Amazon and Google on cloud, and that's going to continue. You're going to get a gap. And then look at the last time you had this gap. The last time back in June, you had a gap up here, gap earnings. You're going to have a second gap today. Wait for 3 days. Now, what's the average price target going to be? I don't know. I mean, we can take a look at FinViz on it, but the average price target right now, it's a hold in the quant. You get 33 analysts that cover this. Their price target right now is 160. You're trading at 157. There's no reason to buy this right now. None. You want to wait until it comes out with some type of update. Are they gonna grow more? But if it dips, it's got 140 in it. You can see the double top right there. It's got 140 in it. So as it dips down, maybe to its 200 day, you take a look at this one. It's got 140. Year to date, you're up 32%. This is a great cloud play. Now, one that's coming out today with earnings, GME. We can go to Earnings Hub and we can look at Earnings Hub and we can look at GameStop. They don't do a press conference, okay? We can see July 16th was the last time in, look at that. Sold 100% of position for 16% Wolf Financial. They're playing this one. They're expected to lose 8 cents. They got a ton of cash. What are they going to do with the cash? They haven't released anything. So Wedbush Securities expects GameStop to report an inline quarter with a modest sequential improvement on the bottom line driven by increased income. Remember, they announced that they're going to sell the actual console. The retro website includes games for NES, SNES, Game Boy, Advance, N64, GameCube, Wii, blah, 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 blah. They're still expected to lose 8 cents. So there's no real plan there. We talked about elevator pitch. GameStop doesn't have an elevator pitch. Let's talk about social requests. Awesome content, Gary. This is from Joseph on Spotify. Can you look at SMCI? I got in for the long term this summer and it seems to be getting beat down month after month. My reply back to Joseph was, honestly, I go over this every freaking day. There's nothing new that I'm going to say that's going to change SMCI. What's going to change SMCI? You've got the stock split coming up. Do we have some volatility around that? Probably. Algorithm just got you in today, 409%. $409. You're trading at 411. You're up slightly. What do I told Joseph, honestly, Joseph, I feel like I go over this one every day and there's nothing new. We're waiting for the 10K filing and for more fundamental information on earnings. If the guidance is correct, they'll be back to an $800 stock. If there are changes to the fundamentals, it could go back to 200. If they get beaten down in price, meaning that competition like Dell and HPQ beats them down and the margins go down, they're going to be back down to $200. I want to give it a rest. It's one that I bring up so often. So I don't know that nobody should listen to me every day, but I go over this one every day. And honestly, your elevator pitch needs to be there, Joseph. Why did you get in? If you got in because it was going up, it's now going down. We talked about trend lines yesterday. Take a look at this 4 hour, okay? We can pin it from its high back here in March, which was $1,200. Where's the trend? I mean, you touch 3 lines right there. We're right at the trend. Are you going to break that trend? I don't know. I mean, SMCI, again, it's on its way down. You look at the weekly and you look at that. Where's the trend? It's down. It's not up. So if you're holding on to this one and it's a large portion of your portfolio, I get out. If it's a small portion of your portfolio and it's grown to a large portion, maybe you want to look at get out. But just to give you an idea of Apple, this is a preview of tomorrow. When we go to a monthly, I'll do a preview of tomorrow. When we do a monthly, and I was working on this before, look at that. I mean, I didn't sell during this entire time. Yeah, it felt uncomfortable, but my elevator pitch on Apple was simple. I had the iPhone. I had a MacBook at home. At the time, I got a watch and AirPods whenever they came out. Again, they invented, new services, new things for me to do. I was always excited about Apple. Are you excited about SMCI? Do you have a server with an SMCI server with liquid cooling in your house that has an NVIDIA chip? If not, what's the elevator pitch? Because I've said it before, Joseph, I am playing with house money on this one. Nobody should follow me. You should be able to make your own decisions. And that's what the whole podcast is about. It's about guiding you to make your own decisions. And so I've been very clear on this one. There's nothing that I can go over on this that isn't out there, that you can't read. There's no insider information that I have. It is a downward trending stock. Crick from Spotify, thank you for the knowledge and opinions given your podcast. Any advice for low-income people trying to start investing, and how do you and an opinion on Ford? My best information for low-income people, and it's the FIRE podcast. It's as simple as this, and it is hard. For lower income, it is hard. I would tell you, live below your means. And it's for lower income, it's just hard. I would strive for an upper income, a higher income, and that would be my number one goal if I was lower income. If you enjoy your job, there are some lower income people who just like doing what they do, and you find value in life in that sense. That's great. That's fantastic. But if the low income part worries you, make additional income. And that's what the FIRE podcast was about. Honestly, don't buy a course on FIRE. FIRE is living below your means. Say, I made, what did I make? $25,000 a year when I worked for Cox Communications out in California. I was in charge of their pay-per-view, and they hired me. I think it was around 1996. I was making $25,000 a year. I lived in a slum. I mean, I ate ramen noodles. I went out for entertainment. I would go to free entertainment instead of spending money on entertainment. I drank $2 bottles of wine, $2 Chuck, when I was drinking. I didn't spend money. I had in 1996, I had a 1982 Honda Civic with no air conditioning in California, where I had to roll down the window. Yeah, I had money in the bank. Yes, I could have spent money. I wanted to invest. And so the best advice I can give you is not necessarily to load your money in. I would tell you, if you're starting investing, depending on your age, to get into ETFs, because you don't want to lose that hard-earned money. Because if you're low income and you're not adding money, you want to do ETFs. And I would do VOO first. I would do QQQ later. But I would get to that $25,000 mark, and then I would start doing single stocks. Ford's a trade. I mean, honest to God, Ford is a trade. There is no reason that this should be an investment. Let's take a look at a monthly chart of Ford. I mean, you're buying it at the same level as in 2003. Where's the investment? This one's a trade, and it will remain a trade as long as the unions are involved. They're spending money right now on an EV transition that they made a mistake. They went in and they said, hey, we're going to do this. I just don't think that this one's a good one. Now, in the car company space, Tesla's the only one I would invest in. And the reason is I don't think Tesla's an actual car company. I think they're a technology company. I think the rest of them, GM's not a bad one. I think GM's a horrible company. They spent 50 cents on a screw instead of 75 cents on a screw, which killed my grandmother in brakes back in, I want to say 1982, 1983, somewhere in that. It's a horrible company. And that's the way, and you can't tell me that things have changed. Under Mary Barra, it is still a cost-cutting company. That's all it is. They just want to cut costs and put out shitty cars. They told Apple, they had an agreement with Apple for CarPlay, and they were working with Apple. And then they got out of that, and they said, we're not going to include Apple CarPlay in our cars. Why? You think you can do a user interface better than Apple? That's not an investment. It's a trade. Again, it's a trade. The algorithm makes you 34%. So Crick, Ford, I would say it's a trade. You just want to trade those. You don't want to invest in them. And somebody Jim Cramer that loves Ford and comes out, his investing club isn't beating the S&P, so go and just buy VOO. That includes Ford. But I wouldn't put Ford in my portfolio other than with an identifiable trade. Again, the elevator pitch. Is the elevator pitch that you bought an F-250 or an F-150 and you love that truck? Maybe that's it. That could be it. And that could be enough for you to get into this stock. But for me, I don't own a Ford. I'm not interested in a Ford. It's not something that I want to buy. I don't have a Ford dealership. I'd probably rather you get the software that Ford uses, something of that sort. Spotify, Fisher. Gary, with NFL starting to kick off, what's your view on DraftKings? I traded it last season. It worked out well with the Super Bowl and March Madness. I mean, there you go. Fisher, that's your elevator pitch. You've traded it before. You know that this one trades well. Are you asking me, should you invest in it? 200 days moving negative, 50 days moving negative, kind of perked up here a little bit. Algorithm got you in at 36%. Algorithm makes you 140% versus 129%. Is this one that I want to invest in? I don't think so. I mean, for me, the cost on DraftKings, it's just too high. What are they giving away to get new customers? They're giving a ton away. And the quant says hold. It's the valuation, it's the growth, it's profitability. So I honest to God, I think you nailed it. Trade it. The average price target, there's 36 analysts that cover this. The average price target is $49.35. You can see they chased it all the way down and they chased it all the way up. And now you've got this gap. I think once they become cash flow, once they post multiple cash flow positive quarters, I think you'll be fine. But again, I don't want to own this one and just own it outright. It's a trade. I think I've got a small position in this one for the NFL season, but I've traded it. Spotify, Nick, thoughts on Bath and Body Works. Every year around this time, they seem to bottom out, and as Christmas nears, their stock prices rises. Thinking of buying shares now before the season holiday begins. Nick, I'll add it tomorrow, but unless they're coming out with a new iPhone, I don't know what the fuss is about. I don't buy freaking candles, Nick. This is literally Bed Bath and Body Works. Let's see. I don't even know the symbol. Bed Bath and Body Works. BBWI. I know nothing. This is like literally pulling up into the drive-thru of McDonald's and saying, "Hey, what do you think about the Whopper?" Well, I think from my standpoint, it's an upper left to bottom right stock. I don't know. Trade it all you want. I don't buy candles. I can't even tell you the last time I was in Bed Bath and Body Works. Makes no sense to me. And that weakness right there, with the lower end consumer being weak, the people who are looking for sales, are they going into Bed Bath and Body Works rather than Dollar General and Dollar Tree? Because Dollar General and Dollar Tree, they're going to Walmart. And are the people at Bed Bath and Body Works just going to Walmart and Costco? Maybe. Doesn't look like they're going to Bed Bath and Body Works. So trade it. I mean, you just had your question, you had your thinking of buying shares now before the holiday season. It wouldn't be one that I would do. And again, unless they're coming out, Bed Bath and Body Works comes out with their new iPhone. I don't care. Scans. One, Palantir. We got to buy on Palantir. Now, I did get a question in the chat here. Should I trim Palantir? You just got to buy on the algorithm. I would say wait to see what this one does. You win 41% of the time. Now, you only make 105% in the algorithm. You make 344% if you bought this 2 years ago and you just held on to it. So you do make more money buying and holding this one. But why would you sell this into strength? Again, you're selling into strength. There's no reason to. I would put a stop loss at $30. That's where your 9-day is. Put a stop at $30. Okay? That's when you can start to trim. As you start to see it pull back to 32, it's right now at 34. As you start to see it pull back, just up your stop loss. You can put your stop loss in at 33. Just keep upping it as it continues to go up. But I wouldn't get out of it completely. I would just start trimming it. But again, remember, what's your elevator pitch in Palantir? If your elevator pitch in Palantir is that this is going to be the software that runs the world, they just had a deal with BP Oil yesterday. And BP Oil just put a bunch of money into them and started the software. And the CEO couldn't be more, complimentary of Palantir software and how much it's done for their business. If this is something that you think is going to change the world, keep it. What's your elevator pitch? That's what I would say. SMCI, same thing. We got a downward trending stock here. If your elevator pitch is that this is going to be an $800 stock, stay with it. I'm playing with house money. I don't have an elevator pitch on this one until I see what comes out from the 10K and the financials. But I'm playing with house money. I've got all profits in this one. I don't have any of my personal capital in this. It's all profits. Snowflake. This is one that I have a small position in at about 150 to 160. I think I even bought it 180, but I think it's 150, 160. And I've said this before, that I thought this range between 120 and 200 was the where to buy. I bought in the upper part of this. Okay, I bought in the upper part of that range. It has broken that range. We finally have a 200-day. Look at how low you are. Snowflake's got a problem. Now, I've got to make a determination because this is an upper left to bottom right. Again, there is no positive trend line in this stock whatsoever. None. GLBE. This is one that we talked about. Talked about trend lines yesterday. Here's one that's down. And if you go and look at a weekly on this one, it's just in this range. But in the 4 hour, there's nothing positive about this stock. If we pull this back, this is one that has just gapped down. There was a short seller back here, and then their earnings dropped. This is just Global E Online or something, GLBE. It's in our in the watch list, and it came up as a scan. But there's nothing that tells me, oh my God, I've got to get into this one. What upward trend would you see in this buy right now? So, one that got a cross up that we talked about that might have a possibility of going up, XLRE. We talked about this one. This one has just been on a run. And when we look at the weekly, we can see it's in an upward trend. Now, I would say you're probably going to that 50. It's at 45 right now. You might double top again out of that one. That's going to be your resistance. Is the real estate market going to blow up? Maybe. I just had a buddy who sold his house. We got Dexcom, we got Intuit, we got Fastenal, we got Thermo Fisher, we got MasterCard, Abbott, Lockheed Martin, DRN. A bunch of scans. They're all in the newsletter. So, two things. I would urge you, take advantage of Seeking Alpha Premium with the 2 free Alpha picks. Lock in that price before October 1st. Lock in the price. You get a free 7-day trial. There's no reason not to. And to Trendspider, if you want the 4-hour algorithm, if you want to sleep at night and you want something that tells you, hey, you can get out or get in, again, it's Trendspider. And there are so many more things you can do with Trendspider. Like I said, the go, no go, I included it in yesterday's newsletter. There's a go, no go. It had you in yesterday. It looks like today, we're not getting the strength that we did yesterday. Apple is down 1.5%. Sell the news. I kind of said it, that I thought it was a sell the news. Did I get out? No. I sold at 230. I trimmed at 230. I didn't get out. I sold a little bit in my retirement account. Goldman Sachs yesterday said their trading business is down by 10%. There's a buying opportunity. You're right at the 200-day right there on Goldman Sachs. Banks are incredibly, with the rate decrease coming up, Google's up 1%. They just got an EU fine. It's huge. They're up 1%. Microsoft is up 2%. Up 2%. I don't know what happened. Roblox, that's probably the Oracle bounce. Roblox is up 1% at 44. I said it was going to get to 45. If you want to short this one, I would short it. I think that 44.81 is just resistance. Tesla's up 4%. They're getting a huge bounce. Walmart's up 1%. Is Costco? Costco's kind of even. So I think there's opportunities in the market. I think there's ways to play this. But again, have your elevator pitch. We'll talk about the portfolio tomorrow, but that elevator pitch is important. Don't just give me hey, I like this one because it's got a drone thing. Well, if you like it, go and do the research. Tell me I like that this stock, it has an upward, it's a trade, Gary. It's got an upward trending MACD, just crossed over. The RSI is down in oversold territory. The business fundamentals make sense. Tell me that. Don't say, hey, this one, what do you think of it? The podcast is about teaching you. You should fish. I'm not handing you a fish. You should fish. Now, if you want, what we're going to do in the paid newsletter is you're going to provide me a chart, and we're going to go over that live at some point in time, and we're going to set that up. So it's going to be more interactive and more fun. But, and I'm sorry to go off and kind of spout off, angry old man Gary, get off my lawn kind of thing today. But I think it's times like this where you're in seasonal weakness, where people are asking about, this stock, this stock, this stock. In my mind, we're still in a bull market. We're in a bull market until we're not. Okay, with that, I'm out. See you tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.